Hi there, good morning. My name is Jan Steele and I'm the founder and non-executive director of Lucid Group. And I'm happy to be here this morning to share my experience of seeking investment to help us grow our healthcare communications agency. I'll tell you a little bit about me. I have a strongly academic background and I went into the pharma industry and spent many years there in different roles before I left in 2007 to set up Lucid. Felt like there was a really clear gap in the market for an agency that understood client strategy well and had true passion for improving patient outcomes. So I'll tell you a little bit about Lucid. So we would say they are the leading strategic healthcare communications agency. The clients are pharma companies and we're quite selective in who we work with. So we will work with companies that are bringing really innovative new medicines to market. We will usually work with them pre-launch and through the launch phase and beyond. That extends the life of the partnership, but it's also where our strategic approach brings the most value. We would say we're science-led, but also strategically focused. So we have a team of absolutely amazing scientists who work on these innovative medicines, but also they understand the client strategy. So what they're able to do is help the clients tell a story around why the science is important to help the patients achieve the outcomes they want. And finally, in terms of business, what kind of a business is it? Well, it's a really, really successful business. Year on year, in excess of 30% organic growth, very healthy gross margin, in excess of 40%. And this year, 2021, we'll have an EBITDA in excess of £10 million. So now I'm going to tell you a little bit about our journey to seek investment. So we were founded in 2007 and we started to think about getting investment in 2016. Our revenue by then had grown to 12 million. But like any rapidly growing, ambitious organisation, we had a lot of challenges and we knew that we needed support to overcome this. I mean, we had two quite risk-averse owners of the business, and this was the first company that they had set up and grown. We were very highly focused on our clients, our culture and our team, and not necessarily focused enough on how we would achieve our ambitions and our growth, but also we didn't do well at building our own infrastructure. So we needed a lot of support to build out functions like finance, HR, legal. And also we needed the rigour of a monthly board meeting with support from a wider leadership team that had very different experience to us and different capabilities. Finally, clients were demanding more and more of us. We'd managed to cement ourselves as a really, really valued partner with a seat at their table. They trusted us and we knew their strategy. And they wanted us to deliver more broad offerings than we were able to do. So we knew that we had to either acquire or merge to meet these needs. So we set off to look for investment, and I've said at the top of the slide here, both of us said that there was no way we would take private equity investment. And even though we were fairly confident in our opinions about what the journey would look like, we were wise enough to work with corporate advisors. We worked with Results Healthcare to run a really rigorous process to identify the right partner. And Results were a good choice for us because they understood both the space, but also they understood our business really well, having worked with us intensively over the previous couple of years to get us ready to go to market. We'd identified two trade partners who we knew would be interested and who we were keen to partner with. And if I'm honest, a lot of our focus was around working with them to map out what that kind of partnership would have looked like. We also knew what kind of a deal we wanted. And initially, we only included private equity to kind of benchmark the deals. We finally selected a private equity partner, much against all of our initial thoughts, and we moved to exclusivity. But after initial meetings, it became really clear that actually they probably weren't the right organisation for us, and the chemistry of the team probably wasn't right. So then we went into a second mini process, and LDC were part of that mini process. So we selected LDC, and the investment began in June 2017, and LDC exited quite recently in March 2021 this year. So why did we pick LDC? Well, actually, the team formed the basis of our initial decision. We felt immediately that the team that we would work with was a great mix of experience and financial capability. They were very authentic, they were very approachable, they clearly had a lot of enthusiasm for our business, but also the space that we were in. So the healthcare space is very, very attractive, and I think they hadn't done an awful lot of deals in that space, and so we were learning from each other, and that felt good. I think things that we know now that we didn't know when we selected them, that also made them an excellent choice, was that they have over 40 years of experience of working with ambitious leadership teams like us, and particularly small to medium-sized businesses with big opportunities for growth. And they offered not only financial investment, but strategic support and finally tactical support in the guise of a value creation team, and we worked a lot with them initially. They were highly flexible, so we were able to tailor the deal we wanted, and in the end they ended up investing £11 million minority investment. They were part of Lloyds Bank Group, and that gave us some comfort that they weren't managing a fund, but also that you had the security of that backing. But most importantly for us, we wanted to acquire, and we realised that they not only had the capability to help us acquire and an enormous infrastructure that could help us effectively do deals, but also they're very, very growth focused. So for every investment they make, there is also £100 million available for follow-on funding to help management teams make strategic acquisitions. And actually, if you look at LDC's portfolio, over 2/3 are using a buy and build strategy. So with hindsight, that was probably the reason we should have chosen LDC. And when we made the acquisitions we did, it became abundantly clear that LDC knew what they were doing, and they were able to make both the acquisitions super effective, efficient, and bring all of their experience and knowledge to bear on that. So the journey. So I think initially we took a lot of advantage of their value creation team. Specifically, they helped us build out our finance function. They vastly improved the way that we were reporting our financial data, but they also were able to connect us to individuals in their other portfolio companies who were facing any challenges we faced. So from being a very small team, all of a sudden we felt like our network expanded and we could get support and help to meet our challenges much better. We rapidly acquired 2 organisations. That gave us new capability, and it helped us to drive stronger partnership with our clients because we diversified our offering. We expanded internationally. We were able to set up in Dubai and Singapore, both key markets. And then also the board meetings, actually. I think, again, with hindsight, we underestimated the importance of those. We were going through a period of rapid change, and we were incredibly busy. The company was growing exponentially, but what the board enabled us to do was spend time making sure that we were focusing on our key priorities. So in the period, did we grow? Well, we grew phenomenally. So our revenue grew from 12 million to 29 million in the period of LDC's investment. And here it is graphically. So you will see before 2017, when LDC invested, of course, we had good growth, but I think it was modest compared to the growth we achieved after the investment. You will see on here that we made our first acquisition in 2019, our second acquisition in 2020, and LDC exited earlier this year, as I said, with revenues of 29 million. So what are my overall reflections? I think LDC were an absolutely excellent first private equity partner. They were very collaborative. They were really excited about our business and joined us for a lot of our business meetings. They were ambitious and they were incredibly supportive around all of the strategic acquisitions we wanted to make. But I think we learnt more than that. We learnt that be very broad-minded when you're thinking about how you achieve your strategic goals when you're seeking investment. We spent a lot of time working hard to establish partnerships with trade partners, when actually if we'd have identified that private equity probably would have been a better partner for us earlier, we'd probably be ahead of where we are now. I think we've learned that no two private equity organisations are the same, and you need to take the time to understand the strengths and weaknesses of each, and talk to people, other people in their portfolio of companies. It's really helpful to get some first-hand experience. Your board will be your anchor whilst you grow. If, like us, you grow rapidly, there'll be a lot of change, and you need to be sure that you really love working with them, because you need them on side and you need to work hard with them to make sure that you stay on track. We learned that private equity investigators are really rigorous. So whilst you may think you've made a decision at board, things then will go on to, for example, investment committee. So you need to make sure that you're working hard and you're committed to making sure the wider stakeholders of your private equity team are kept in the loop and have all the information that they need to make the right decisions about your business. And then finally, make time to have regular structured discussions about the life cycle of your investment. Everybody contributing to this decision has a unique perspective and probably a different opinion. So it benefits everybody to make sure that all expectations are aligned. Thank you very much.